It's time now for the big three. Three stocks, three charts, three trades. Ben Lichtenstein will take us through the charts, and here to take us through the trades, Mike Shore is with us, Director of Trading Education at Prosper Trading Academy. I'm glad to see you both today. So, Mike, I'll begin with you as we take a look here at Tapestry, which is the parent of Kate Spade, Stuart Weitzman, Coach, some really fun names, but it's fallen off a bit lately. What are you thinking here with investing in this name or trading this name, to be more specific?
Yeah, I mean, this name, like all others, I'm kind of, the adage goes, I don't know where we're going, but we're not staying here. So I do like the upside here. Of course, the general market is going to dictate that. So I'm looking for trigger type of entries, meaning that we have to get to a certain level before getting long. You're not necessarily trying to pick the lows, but you're trying to get a confirmation buy. So that's what I'm looking for in Tapestry.
All right. So that's what he's planning on doing there. The high was back in May. As I mentioned, you could see here the Tapestry chart, Ben, and that drop off that I was talking about. Your thoughts here?
Well, I like that in terms of where things stand as far as price activity, and I think that's good advice in terms of really letting price and the product dictate when there's opportunity to trade rather than just turning your machine on and opening up your platform and starting to decide, hey, now that you have time to trade, you're going to find a product to find opportunity in. So let's dive into Tapestry, though. 5-minute time frame, actually where you find the probably most well-defined trend, because as you get a little bit more into the bigger picture, you kind of lose some of that really well-defined migration of value. In this case, you can see it to the downside. I've got the 5-minute time frame up here, and you can see we actually just posted a new low below $40, a reflection of the broader market concerns, the risk-off environment we've been seeing. And here's a good look again at the move from 47 down to, well, again, as mentioned just recently, below 40. This comes with Black Friday, Cyber Monday numbers, not necessarily as impressive as investors would like them to be, in addition to some of the COVID variant concerns and, just as mentioned, that risk-off type environment. But you can also see here how that selling that we just looked at on the 5-minute from 47 down to 40, well, that was part of a double top that actually played out here. That high from the 11th of this month, and then again they retested that on the 22nd, and you can also see how both they failed and they've come off since. Again, 47 is a bit of an area of resistance right now. But again, getting back to Mike's point there in terms of letting the market provide opportunity, I think some of that might come a little bit lower here, down around 38, the lower extreme of this range that we've been in basically all year. You can see the upper extreme 49. That kind of coincides with that high we just talked about around that 47 level. And then just real quick, I want to just point out that, well, Tapestry, if you look at the upper extreme from back in 2012 down to the lower extreme that we saw in pandemic around 10, we're kind of right in the middle of that right now at 40, again, 79 down to 10. So we've found ourselves in the middle of a range that we've established at this point. But yeah, lower extreme again at this point, 37-ish, I would think, to keep an eye on.
Okay, and so as he talks about that 37 level, tell me, Mike, what is your trade here on Tapestry?
Yeah, I don't know if we ever get down there, and if we do, then that's a different conversation. But I'm actually looking for a bottom, and then, like I said, have the stock do the kind of the work for you. So we had a consolidating pattern. So if we get up to 43.18, I'm looking at a call calendar using the 45 strike. I'm going to use regular DEIS versus the end of the year DEIS 31st. So like I said, down here, it's going to be a different story. But if we get up to 43.18 in the next 2 days, that's what I'm looking for. So the 45 call calendar, regular DEIS versus DEIS 31, and then that would be an entry. Was trading, that should be trading somewhere around 30 cents if we get that.
Yeah, and you know, Mike, let me ask you a question, because this does seem like a good trade, but at the same time, do you consider now, and I know you had to put these in early, we have an accelerated sell-off that's tacking on to Friday. Would you think about changing the trade based on the market conditions, Mike?
Well,
and I know you're forced to send this stuff early.
Yeah, but that's exactly why I was forming that, knowing that Powell's going to be speaking and that things could go south. That's why I wasn't saying, okay, this is a short-term bottom, let's buy it here. If we do get a recovery and we get that, so one of your strongest plays in this type of market where we're flirting with these highs that, we continue to bang up against. You want that confirmation. That's why, I'm not saying, hey, let's try and pick the bottom here. Let's let the market put its own bottom in, and then that confirmation move would be up at 43.18 for me.
Right. Mike, a good clarification there. Thank you so much for that. Ben, your thoughts?
Well, I like that in many ways. Let's take a look at the daily time frame again. And just speaking to a pattern that we talk about frequently on the show, Nicole, this sideways consolidation and how traders tend to favor the long side as you're above the middle of that range and favor the short side below it. So it sounds like Mike's actually waiting for that bid to come back into play, favoring the long side should we get that momentum to the upside, and then again hoping for a breakout in continuation of the longer term trend that has been for the most part in place to the upside. So yeah, I mean, I like that. It sounds like he's patiently awaiting some strength and not necessarily wanting to get a step out in front of this one as it's headed lower.
Right, as he said, keeping the testimony today, the congressional hearings in mind. Mike, let's get to your Snap talk here. And you have Snap Inc., the parent of Snapchat. You have considering the downside play when it comes to Snap, and what a gap down on that October earnings report. Tell us a little bit about your thoughts and trading mentality here for Snap.
Yeah, now this one was one that it is put in about, I don't know, I can't remember, 3 or 4 days of about the same lows. And if it can't hold that, I mean, you're going back a long time to try and figure out where support is there. So while you're trying to figure that out, a downside play makes a lot of sense to me. So if we can't hold, what was the level there again? 46.96. And, given the testimony that's going on right now, we might be below that. But that was what I was looking at this morning, 46.96, and then looking at a December 31st, 42.45 put spread.
Okay. Ben, your thoughts?
Well, we're not below that yet, Mike, but we certainly are headed lower as we speak, down about 3.5%, trading in the middle of the $47 level. And rarely do I start with the bigger picture look at price activity, but I think when you're talking about Snap and the crackle, and in this case the pop that's ensued, I think this is a pretty good look at the weekly time frame here, the move lower, and I can see why Mike's dialed in on this level here, right around this 46, 47, 45 area, I'll call it. But certainly that's where we found support recently before the run up to 83. Now, as we just kind of get a little bit more granular into some of the selling we've seen, remember this came after earnings, disappointed from 76 through 70, and again, just posting a new low right now. So a reflection of some of the broader based market weakness, selling, and just concerns that we're seeing in reaction to the COVID variant. Here you can see Snap. This is actually the hourly time frame, and the move lower and that we just looked at from earnings, the disappointment that investors expressed there, the current disappointment, this is just part of a bigger move lower, talking from 83.50 all the way down to, well, almost half that right now, 46. And ultimately, again, if you take a quick look here at the daily time frame, you'll see that, well, back to the bigger picture here, you can see that we found key support again around this 45, 47 area. So this is going to be something to watch, similar to what we were just talking about as far as Tapestry. This is, again, an opportunity for the patient longs to get involved here at the lower extreme of a range that we've been in. Or as we talked about in the case with TPR, you can wait for some strength up and through 65, that 70 area similarly again, but testing a lower extreme a little bit more towards the extreme low here than we were as far as TPI. But both of these are a reflection of the broader market, sentiment.
Understood. And Mike, your final thoughts here on the trade when you talk about Snap and the risk that you're taking, the max risk, which I see here too.
Yeah, this is a put spread, and if you see that the common theme here is not trying to pick the lows and the highs of this range. I'm looking even to the upside and the downside, breakout type of scenario. So this was that 42.45 put spread. If we can buy that for 80 cents, that's about where it should be trading if we get to that level that I talked about earlier. If we buy it for 80 cents, then we have 220 of maximum return basis, and then your risk would be 80 cents there, just what you paid for the spread.
Okay.
Implied
Let's get to
volatility
Amazon. Oh, I'm sorry. Keep going. I didn't mean to interrupt.
No,
you.
I was just going to say, since I couldn't really find, without going back way too far, where a decent support level was there, I let the implied volatility give me my target of 42.
Understood. Okay, Mike. How about you're a little bit bullish bias towards Amazon, which is an interesting one. By the way, Amazon Web Services got a cloud contract today from United Airlines. I saw that as I was researching the Amazon trade there. And I know you're considering an iron condor, but there's been some consolidation, right? A little bit of a breakout on the 19th, I saw, of November. Tell me about your thoughts here when it comes to Amazon, which is right now in the holiday season, too.
Yeah, I mean, with Amazon, kind of as Amazon goes, the economy goes and vice versa. So, if you aren't bullish on the economy, then really kind of anything of these type of names, which is highly correlated to the consumer, is not going to be great. That's why normally I would say, wow, Amazon, down near its intermediate support here at the 20-day moving average, that's usually a screening buy, realizing that we have some things going on in the background that's obviously giving us some pause as far as just opening the gates to the upside. So that's why I put together an iron condor, but a bullish buy. So the delta is actually positive for this one, meaning that the put spread that you're selling on the iron condor is closer to at the money than the call spread. So I'm not looking for a screaming move up here or anything like that. I'm looking for, basically to hold, and then, I will risk some of my upside by selling that call spread against it, looking for a neutral to moderate move up.
Yeah, makes sense. Makes sense. Ben, what do you think?
Well, I think Mike's right in terms of Amazon being a pretty good reflection of the broader based economy, overall sentiment in general in the market. And we're hearing from Fed Chair Jerome Powell right now as we speak. He's talking about ending a taper early and basically pointing to some of those inflation pressures that we've been hearing about becoming more persistent and a bigger concern, and that's going to weigh on growth, that's going to weigh on sentiment and potentially consumer spending. And well, excuse me, that's what we talk about as far as the broader market and reflection of. First, though, price activity. You can see some of the recent selling. We're testing a lower extreme around this 3,500 level, but part of a bigger move off the highs that we saw recently, again, 37.62, and testing a lower extreme again of this range that we've been in for about a week now. As we just take a quick step from the intraday, the hourly, you can see the daily time frame. That move that we just looked at, 37.62 to where we currently stand, 35.20. Well, we double topped right around that 37.70, we'll call it now, the same level that we saw back in July. So Amazon's finding some resistance up around that 3,800 area, we'll call it. But take a look at the bigger picture here. This is, again, a longer term kind of consolidation, grind higher. And, I just sort of see this as acceptance of the price activity, the huge run up that we had seen, and reflection of investor sentiment that, well, they're going to be around for the long haul and continue to reward the longs investors for the most part. But a little bit lofty at these levels. I mean, you can see why we're not necessarily seeing that same enthusiasm for AMZN as we were on the way up, and as, again, these COVID concerns come into play. But here's another reason why. I mean, tough to buy into this one after such a huge run up. Again, I think all of us would testify to the fact that Amazon's become more a part of our lives than it ever was throughout the pandemic. But I guess the question is, have they gone a little bit too far, too fast to the upside? And maybe that's what's got them pulling back a little bit here. So I'd be keeping an eye on 3,000 up to that 3,800 level. It does seem to be the range that we've established now, maybe 2,800 to 3,800, you could call it. But again, another one that we're watching, another stock that we're watching that has a well-defined upper extreme, well-defined lower extreme, and establishing a bit of a range here, some random price activity overlapping and consolidation type price activity.
Right. Okay. And so the final thoughts here for you and your trade, Mike Shore, as you take a look here at the Amazon trade.
Yeah, I just concur with Ben said. My range is a little bit tighter, and it's slightly biased to the upside. But I'm looking at that 35, 10, 20, 37, 20, 30. And you can sell that, and that's going out to regular D, so that's D17. At least this morning you could sell it at 625. You might be even able to sell that for a little bit more. So you got $10 of risk, less that 625, so 375 of risk, taking in that $6.25. So that's not a bad risk to reward if you have kind of a sit and stay that, if Amazon goes, kind of everything's going to go with it. So it depends on if you just sell everything if you're not going to do that. That's what I would say.
Understood. Great to see you both. Mike Shore, Prosper Trading Academy, with the trades there today on the Big Three, and Ben Lichtenstein. Thank you both very, very much. Good luck there at Tapestry, Snap, and Amazon. Thanks.
Thank you very much.
Thanks.